Today's highlights. US regulators are stepping up with an iron fist, and Canada has issued a sky-high fine for cryptocurrency. The regulatory drama has begun. Can Bitcoin's price hold steady? This year, gold investors are all smiles because gold's gains have surpassed Bitcoin's. But among the major altcoins, only Solana has been treading water, failing to reach a new high. Why has Solana fallen behind? This year, the number of meme coins has exploded. Do you know how many there are? Bloomberg did a tally, and the result was shocking. There are 13 million more meme coins than before. This isn't an explosion of creativity, it's a complete regulatory vacuum. That's why you see the US Congress getting anxious, rushing to put the Digital Asset Clarity Act on the agenda, aiming to regulate who can issue coins, who oversees them, and how to investigate. The US wants to set rules for the crypto market, or more specifically, for coin issuance. Paul Atkins, the chairman of the ICC, said they'll get it done this year. The acting chairman of the CFTC also stated that this year they will focus on spot trading, derivatives, and staking. Over at the SEC, they've even launched something called Project Crypto, aiming to create new creative exemptions or innovative waivers. Although the government is behind closed doors and can't make final decisions yet, the direction from the White House is already set. The SEC will establish a crypto safe harbor, and the CFTC will oversee non-securities assets. So even though Congress is technically in recess, both parties are still hard at work. The Republicans are keeping a close eye on intermediaries, while the Democrats are worried that DeFi might blow up. Although the two parties argue loudly when it comes to legislation, they are actually quite united. But now the situation is very clear. This time, the US is absolutely determined to bring the crypto world under a regulatory framework. Why? Because if you cannot beat them, you have to join them, you have to bring them in. So what about the short-term market? Bitcoin will probably keep fluctuating around $110,000. In the short term, policy will still influence market trends, but in the long run, once this round of regulation is implemented, it could very well become the ticket to the next bull market. All right, now Canada is getting serious. Just yesterday, they made an announcement. From now on, no new mining licenses will be issued and mining will no longer be allowed. This time, the anti-money laundering agency called FinTrack directly slapped a record-breaking fine on a Vancouver-based crypto company called CryptoMers, 177 million Canadian dollars, which is about 126 million US dollars. That amount is astronomical. What is this company accused of? In July 2024, they failed to report over 1,000 suspicious transactions, and they also missed more than 1,500 crypto transfers exceeding 10,000 Canadian dollars each. So the boss of FinTrack came out strong, saying that such actions must be punished. There's no other way. This is unprecedented. It's the first time Canada has officially taken a hard stance against cryptocurrencies or crypto exchanges, serving as a wake-up call for the entire industry. At the same time, let's look at the on-chain data regarding this recent Bitcoin pullback. The confidence is very strong. Why? At $108,300, have you noticed? This support level is extremely solid. Every time it drops below, it quickly bounces back. This means that 108,300 is the core cost line for midterm players. Let's take a look at the on-chain data. For short-term holders who have held for 1 to 4 weeks, what is their cost? It's $116,300. For those holding 1 to 3 months, the midterm group, it's $114,500. And for those holding more than 3 months up to 6 months, the veteran holders, their cost is around $108,300. So you can see, this is a very solid support level. What does this indicate? It means everyone is holding tight and not letting go. In simple terms, no one is loosening their grip on their tokens, and the bottom remains very solid. Right now, it's a shakeout, not a crash. Let's take a look at the latest research report from A106Z. It says that the cryptocurrency market still has room to rise. According to the report, the crypto space now functions like a cyclical system. How should we understand this? Prices drive developers, developers bring in users, and users in turn push prices even higher. So the most explosive growth in user numbers isn't actually happening in the United States, but in developing countries. The blockchain space is getting even more competitive. Why is that? This is the main reason why our channel's 7 language versions are all focusing on Asia and emerging markets. Stablecoins are even more astonishing. This year, their transaction volume reached $46 trillion, which is 20 times that of PayPal and 3 times that of Visa. It's practically become a global on-chain dollar frenzy. If we look at the on-chain data from the past few days, it's also quite interesting. The proportion of Binance's stablecoins, USDT and USDC, has been steadily declining and has now hit a 2-year low. What does this mean? This metric shows whether there are more Bitcoins or stablecoins on the exchange. If there are more coins and now stablecoins are piling up higher than mountains and seas, it means the money in the market hasn't left. Everyone is just watching, but no one's making a move. Historically, every time the ESR is this low, it's like a deep breath and a prelude before a major market move. Right now, there's plenty of liquidity in the crypto space. The funds are all on the sidelines, waiting for confidence to return. It's possible that the day the US government gets back to work will mark the beginning of a market rebound. Alright, please like and turn on the notification bell. I'll help you sort through the news in the Web3 world that's closest to making money, and you're also welcome to become a member. Today is Thursday at 8 p.m. Don't miss our members-only live stream. Let's look at the news. Do you all remember when Bitcoin surged to $70,000 in 2024? What were everyone's expectations for Bitcoin's future back then? All risk assets were rising, right? Stock investors were watching the S&P, and the crypto community was watching Bitcoin. But unexpectedly, the brightest performer this year wasn't Bitcoin. It was gold. This old relic of an investment product, abandoned by the new generation, has reached $4,250 per ounce for spot gold as of now. I remember last year when we mentioned it, the price still started with a 3. Let's compare. Over the past 5 years, Bitcoin has risen by 1,000%, its growth outpacing gold by 10 times. But this year, the story has flipped. Gold is up 50% so far, while Bitcoin has only risen 15%. So the gold aunties are all smiling while the crypto elites are left speechless. But do you know who the real driving force behind this is? It's not retail investors nor institutions, it's the central banks of various countries.
In 2024, global central banks purchased as much as 1,045 tons of gold, surpassing 1,000 tons for the third consecutive year. According to data from the World Gold Council, Poland increased its holdings by 18.66 tons and Kazakhstan by 15.65 tons. China's central bank steadily increased its holdings by 6.22 tons. While developed countries generally have gold reserves exceeding 70%, China's is only 6.7%. There is enormous potential for further increases, with the proportion of central bank gold purchases soaring from 10% to 20%, providing solid support for gold prices.
But do you know what's really behind the surge in gold prices? It's a much deeper reality. It started when Trump humiliated Zelensky in the White House, when he began withdrawing troops from Europe, and when he wanted the Federal Reserve chairman to resign. What he undermined was the very foundation of the US dollar, the trust in the dollar. When Russia realized, hey, the money I have in the Federal Reserve can be frozen by you, central banks and banks around the world were all stunned. They thought, maybe we shouldn't be stockpiling US dollars anymore. Hoarding some gold might be more reliable.
Standard Chartered Bank data shows its correlation with the Nasdaq hit 0.5 and early this year rose to 0.8, while its correlation with gold fell to 0.2. Since 2024, after the US approved spot Bitcoin and firms like BlackRock entered the market, Bitcoin has been completely absorbed into the US dollar system. Now, the rise and fall of Bitcoin no longer depends on consensus, but on the Federal Reserve, on Trump, and on Wall Street.
It's a moving benchmark for Bitcoin because I do think that Bitcoin will eventually surpass gold in market cap. I fully expect that we'll see gold at 10,000 an ounce in the next decade, and I expect to see Bitcoin at $1 million in the next, 5 or 6 years.
The United States spent 80 years exporting the US dollar and American values to the world. When these two things are no longer reliable, the world will first see changes in the trade structure, which will eventually drive changes in the capital structure. And when the capital structure changes, what will emerge is a society organized like a confederation, with fragmented regions each holding their own power, like feudal lords. Gold and Bitcoin in the future will become two sides of the financial mirror. One represents the values of the old order. It is stable, but it emphasizes order, while the other represents the freedom and ambition of a new system. So as you can see, when the US dollar becomes unstable, gold is once again being frantically bought up by central banks around the world. And as for Bitcoin, it is currently trying to undergo domestication by Wall Street. In the future, should we be hoarding gold? Is it more reliable to hoard gold, or is hoarding Bitcoin more like holding gold? I think both have their merits and shouldn't be neglected. If you also feel that the future of finance is somewhat unreliable, then it's wise to stock up on both gold and Bitcoin. Adults don't make binary choices. What do you think? To be honest about Solana, I was once a chives investor, completely convinced about its prospects. But when it dropped below 20, my confidence wavered. Now the same thing is happening again. If you look at it, recently Ethereum, BNB, and Ripple have all hit new highs, but Solana hasn't moved at all. It's just lying there, barely breathing. After reaching $295 a month ago, it hasn't budged at all. No matter how hot the meme coins get, no matter how booming the whole ecosystem is, the price just doesn't move an inch, so people are starting to have doubts. The issue with Solana this time isn't just about the price dropping, it's that the market's trust has been shaken. You have to understand, when both technical indicators and ecosystem data are strong, but the price still can't go up, it's either because someone is secretly selling or the trust mechanism is starting to weaken. Capital will reassess the actual value of any public blockchain.
According to the latest Grayscale report, though SOL is only third by market cap, it leads all public blockchains in daily active users, trading volume, and transaction fees. Solana DEX's cumulative trading volume has surpassed $1.2 trillion, more than any other blockchain. Its top DEX aggregator, Jupiter, is set to become the largest aggregation platform by trading volume in crypto. The Solana ecosystem generates about $425 million in monthly fees, with an annualized yield over $5 billion.
So this time, Solana really has a bit of a plot twist. Its performance is excellent, it has a large user base, and high trading volume. Even the meme coin craze was led by it, right? Aside from scandals like outages and its inflation issue, there really aren't any other major flaws to pick on. So according to the script, Solana should have the protagonist halo, backed by 6 top American capital firms, right? But the price is just stuck at $185. So when there's a disconnect between market hype and the actual price, we have to consider that capital or traders are no longer just looking at technology, narrative, or liquidity. Maybe Solana really needs a new sector, or it needs to kick off a new story. It has steadily gained a foothold in the US. So is this protection or a simulation? CZ got involved, and the shorts are scared. If this scoop is true, does it mean decentralization can really overthrow centralized exchanges? The US crypto bill, Genesis, actually officially took effect in July. This marks that the US, or rather Washington, has now incorporated cryptocurrencies into the formal sovereign financial system. Stablecoin issuers in the US must hold 100% US dollars or short-term US Treasury bonds as reserve assets. If your market capitalization exceeds 50 billion US dollars, you must undergo an independent annual review in the US. Even if you are an overseas institution or a foreign company, as long as you issue US dollar stablecoins, you must comply with US regulatory standards. So today, the SEC and the US Treasury have added a detailed regulation to this bill, which covers 2 main aspects. First, how to conduct compliant reviews, and second, how to supervise whether these reserves are truly real and effective.
U.S. Democratic Senator Elizabeth Warren once again criticized cryptocurrency policy, sending a letter to U.S. Treasury Secretary Scott Bessent, specifically criticizing the Genius Act signed by Trump for being too lax in regulation. She cited the Trump-led stablecoin USD and the Pixel Mutual PYUSD incident as examples, warning that this law could trigger financial risks. She called on the Treasury Department to close loopholes, prevent conflicts of interest, and protect consumer rights. Federal Reserve Governor Michael Barr also pointed out that the Genius Act still has multiple regulatory shortcomings.
Effectively cutting the benefits that people were promised, and they are making people suffer all across this country. It is wrong.
One thing is clear, the Democratic Party, especially Warren, absolutely disapproves of stablecoins and attacks them constantly. She even brought up an example that you really can't refute. Everyone remembers that not long ago, Paxos accidentally issued 3 trillion PYUSD, which is 3 times the global GDP. So Warren said, if you slip up 2 more times, there won't be enough global financial crises for you to play with. This statement is a bit exaggerated. It's an attack after all, but it's not entirely without reason. Actually, have you ever thought about it? When it comes to real payments or on-chain payments, whether you're pegging to the US dollar, US Treasury bonds, or the Japanese yen, you're still tethered to that string held by centralized institutions or governments. What truly has value, or what real on-chain payments should be, are assets that are native to the blockchain itself. It is generated on the blockchain itself, and it doesn't collude with any government or power in the real world. This is what will make the future Web3 payment system the cleanest and purest. So, who can take on this role? Write your answer in the comments. Exchanges hold a special place in the crypto world. Even Wall Street doesn't want all institutions to be both players and referees, yet exchanges are exactly this kind of magical existence. But things are starting to change now. Since Hyperliquid launched in October, staking 500,000 hypertokens allows you to open a perpetual contract market, which means anyone can open an exchange now. Moreover, Hyperliquid has another leading statistic. Its DEX perpetual contract market share has reached between 20% and 26%. You should know that this market share used to be only 6%, so you can see that all the major exchanges are now moving into the decentralized exchange space, afraid of missing out on the decentralized trend. That's why Binance founder Changpeng Zhao couldn't help but comment on the rumors about Hyperliquid during a recent interview, and even took a jab at them in passing, saying you need $1 billion to short it. That sounds a bit salty, doesn't it?
The rise of these DEX isn't just about hype, it's driven by real technology. After upgrading to shib 3, liquidity skyrocketed, and even contracts for small tokens remained stable. You could still fill large orders a week later. Solana the Bullet is insanely fast, with confirmations taking just a few milliseconds. HKEX uses a queuing mechanism to compress the spread to almost nothing. High-frequency traders absolutely love it.
I really like that. I really resonate with it. So what's great about Hyper is, yeah, crypto is going to change how finance works, and finance is going to move on to crypto. The thesis is that Hyperlink will be the platform where all of finance migrates.
When it comes to fees, DEX are going wild too. Avantis is offering 0 fees plus rewards. Red Paradise usually waives taker fees, and during volatility, spreads widen. Lighter uses ZK technology to integrate matching and settlement. With real optimization of the mark price, positions are now more stable. These days, DEX are catching up to, or even surpassing, CEX in terms of speed, cost, and liquidity.
I absolutely believe that in the future, decentralized exchanges will be just as essential as centralized ones. Their capabilities are now on par, so you can see that every exchange is making strategic moves. It's inevitable. It's always better to disrupt yourself than to be disrupted and pushed out by others, right? The current data says it all. Trading volume in the second quarter has already increased by 25%. Meanwhile, centralized exchanges saw a 27% drop. So after the FTX blow-up back then, everyone learned their lesson. You have to manage your own funds. No matter which centralized exchange you use, the risks are the same. It's all about human risk. All right, let's report quickly.
Coinbase has finally added support for BNB Smart Chain, so now you can deposit and withdraw BNB directly. But be careful not to use the wrong chain. If there are no people, then it's really gone. Once liquidity is in place, the BNB USD trading pair will be launched. Kraken is about to go public, and its revenue in the third quarter soared to $648 million, more than double last year's. It looks like this crypto octopus is really about to make it to Wall Street. As of October 22nd, the world's top 100 publicly listed companies collectively hold 1,045,987 bitcoins. And just in the past week, 13 more companies have increased their holdings. It seems that no matter how the price fluctuates, the real big players are quietly accumulating. This time, the U.S. national debt has truly reached the sky. It's broken $38 trillion for the first time. For every dollar earned, $1.25 is owed. The government is almost being crushed by interest payments. In short, the U.S. isn't just living on borrowed money. It's surviving on debt. Even making movies can now be put on the blockchain. According to CoinDesk, with the current Reg CF SEC exemption channel, ordinary people can now invest in movie profits and buy shares. Everything is handled on the blockchain. The film and television industry has officially entered the era of tokenization.
All right, this is Li Tang. I want to ask everyone a question. Do you have people like this around you? It's pretty strange. The closer someone is to him, the more guarded he becomes around them. The more sincerely someone opens up to him, the more he fixates on that person and torments them. If you offer him loyal advice from the heart, he treats it like it's nothing. But if a stranger casually says something, he takes it seriously, even treats it like a creed. He scrutinizes those who genuinely care about him with a magnifying glass, picking out their flaws. Yet a few insincere compliments or empty flattery from someone just being polite, and he thinks that person truly understands him, that they're a soulmate. So the world of this kind of person is like a sieve turned upside down. All the essence is filtered out, and what's left is just sand. It's not that no one tries to help people like this, but rather that they're simply not worth saving because they don't believe in it themselves, nor are they willing to try. There's a saying you should remember. You can never wake up someone who's pretending to be asleep, right? Let me add to that. You can never save a fool who willingly chooses to sink. If you have someone like this around you, feel free to give us a like. Every day, we help you sort through the major and minor happenings in the Web3 world. We hope that our news summaries can help you better understand Web3. We also hope you can become a member. Here, you'll find all the membership benefits. We want to lead all our members to strive together so that our Bitcoin keeps growing. See you tomorrow.